You're tuned in to Agriculture Today, and we start our Friday show with a grain market update with K-State grain economist Dan O'Brien. Dan, thanks for joining us once again.
Thank you, Shelby.
Dan, working through what we usually talk about and starting off with futures.
It's been interesting to watch the grain markets. We were mired in such downward trends all the way through, well, basically from harvest and off into after harvest, and then into November, December, January, and even February. It just seems that we could not in any way break out of these downward trends that we had. Kind of channels of prices, a little bit of up and down, but generally definite downs. And now for these crops, we've seen within the last 2 weeks what probably at least for trend breaking sideways moves, not a lot strong to the high side yet, that you definitely identify. Although for corn, especially for soybeans, we do see something moves that could be that definitely aren't downward and are all that much more to the upside. And there's some factors coming into play on it. I should say that in looking into futures, we have a time of volatility right in front of us here on next week, basically Thursday, March the 28th. USDA will release their prospective plantings report and the grain stocks reports. Prospective plantings are, I guess, are potentially volatile numbers that'll come in. They give us some idea of corn versus soybean acres. Expectations are strong increase in soybean acres, sideways to lower for corn. If that doesn't happen, that could cause a quote volatility in the grain futures market. So we'll see. I think that as we've gotten low enough on these prices, particularly for corn and grain sorghum, we've seen the market respond with some better export numbers. At least it's got us quote competitive in the world market, and of course been supporting users domestically on the feed side and the bio and ethanol side. But you look at corn exports for the week ending March the 14th, 60 million bushels per well, basically 60.2 million bushels. We need a pace of about 50 million to meet the USDA's projection. So that's a bullish factor. A strong number. We basically with about 56% of the way through the marketing year accomplished, we're sitting at about 78% bought. We still have some catching up to do to get to the regular shipment pace, but really a positive development. And for grain sorghum, had a week again ending on March the 14th of about 7.5 million bushels actually shipped. Need about 4 to meet the USDA's projection. So again, another positive response in the feed grain side. And again, I think the grain sorghum numbers, they were happening anyway, even at higher prices, but lower prices helped them. And now with the corn numbers, we're going forth there. There's some probably issues in South America. The potential next big supply of grain that would be coming into world channels. Again, if there's any question on that in South America, that would liven things up. Also for soybeans, again, we've talked about this before, Shelby. We were at over $14 back in November, fell all the way down to about 11.25 for a low, and now have come back up to about 12.12, about 90 cents higher. We do see a pace for exports for the week ending March the 14th, about 28.5 million bushels. Need about 18 meet the USDA's projection, so that's good. But where the real excitement has been here in the last few weeks has been in soybean meal and soybean oil exports. Soybean meal numbers can only be termed bullish. Basically have about 328,000 metric tons shipped that week. Need about 284 to meet the USDA's projection. So good strong run. 48% of the way through that marketing year, trails the regular soybean marketing year by 4 weeks, but so about 25 out of 52 weeks, about 48% of the way through, we're 70% bought ahead for soybean meal. That's strong. And even for what tends to trail with soybean oil, we had a week of 12,500 metric tons of actual shipments of soy oil. We need a pace of about 4 to meet the USDA's projection. So this was really an abnormally strong week. So I guess there's an old adage in economics that the best cure for high prices is high prices, best cure for low prices is low prices. And the low prices have come in and really in the futures markets and as they've affected cash have helped to spur demand on and if anything, probably helped us to at least set a floor in these markets and put us in a position now. And a lot of that is based on just usage issues. Now we're coming into the time frame where we'll be looking at production concerns. So there's more optimism for prices to move a little bit higher in coming weeks and months. That was something that I guess that would surely be welcome for the anybody holding old crop grain. I should mention wheat. Wheat had come down pretty in a similar manner after that long-term downtrend. And we're moving more sideways for wheat than we are right now for corn and soybean futures. Are kind of trading in a range from about 550 to 6. If you look at the last several weeks, closed yesterday at 581.75. And again, our time of risk is well, it's here in terms of wheat that's germinated. Certainly germinated, but starting to develop here after breaking dormancy, and would be at risk to any cold temperatures from now through April for sure. So, we're in a time of vulnerability, and I'm sure Chip Redmond in our shop is keeping a sharp eye on that to see where things might go.
And Dan, what are we seeing for cash prices?
Cash prices are for corn really across the state high of 460, at least with what we've seen at these major markets that we watch, and these are the very highest bids. 461 bid in Garden City, 20-cent over basis for corn. 446 at next highest in Hutchinson, and then you got Topeka 441, Colby 441, Salina 436, Columbus 421. So really prices that a year ago we didn't have much thought of ever getting down that low. New crop bids, again, a lot of across the state, a lot of 447 to 462 with one really strong new crop bid again in Garden City, 492, 15 over. So there you go. Just quickly then, grain sorghum prices, the best bids, very export oriented. Hutchinson 471, Salina 471, and both those are 20-30 cents over the corn bids. New crop bids though are at for sorghum about either equal with or a little bit below for where corn was. Soybean bids, everything running from basically 1117 to 1157, except in the Colby area where it broke below $11. New crop bids all around 11 to 1139, 1148 thereabouts. And wheat, of course, we're watching this closely with the wheat harvest out there in July, not that far from where we're at now in March. New crop bids, the best ones, Salina 541, Topeka 535, 550, Hutchinson, really everything over 5, but those aren't bad bids if you're looking mainly at covering direct costs. For trying to cover total economic costs, some of those are more challenging unless you have just really good yields to spread the fixed costs out. So that's kind of the quandary that we're in right now, trying to see what type of average or better yields we would have to keep the costs down for wheat and then hopefully make a profit as we get out in the middle of 2024.
And Dan, as we round out today's conversation, wanting to share a few quick topics of international issues that are taking place that may be making impacts.
Yeah, Argentina's had excessive rains. They're kind of like us 3, 4 years ago when rain makes grain until it doesn't. And that now they've had so much rain and hail and extreme conditions that there are worries concern, uh, and not just trifling worries, but serious concerns about what that'll do to the quantity and quality of corn, soybeans, other crops down there. Also, we're watching Mexico. It looks like that USDA Foreign Ag Service attaches are projecting Mexico corn and grain sorghum production to increase, and also, but still looking at pretty decent U.S. imports. They're trying to recover from extreme drought conditions a year or so ago. So that's kind of where they're at. Just for areas of interest for us, China passing new rules for labeling GMO crops used in food, and basically whereas it wasn't that many years ago, they were claiming that I think we need to be careful. I need to be careful in using brand names. I get myself in trouble if I say the wrong one. But whereas they rejected loads in several years ago, basically because they had GMO genetics in them. Well, now they're bringing those genetics into their own country, and we're looking to keep up in terms of productivity. So that's interesting. USDA attaché talks about soybean imports at 103 million metric tons, and really you and I talked last week about this issue of what data we're watching coming out of China for imports, and we're shifting from watching what their government reports are saying for import inspections to really what the total of what other countries are sending towards them, and those numbers are higher. And finally, for wheat, just continued ongoing issues, and I'm sure our colleague Antonina Braiakic talked about this a lot better than I can, but still contentions on Ukraine's border about grains coming in out of Ukraine into Bulgaria, Hungary, Poland, Romania, and Slovakia. So they have some temporary solutions on that, but still not totally dealt with. And so just I guess it is as it is. And also another case of rain doesn't always make grain, and that heavy rains happening in the European Union, UK are impacting the quantity and quality of the wheat crop. So we here in Kansas, we're pretty pessimistic about what we're seeing for wheat prices, but yet there's some places around the globe where wheat crops aren't doing that great. So we'll see if that ends up and boosts us in terms of exports in the future. But as of yet, we maybe just have some small green shoots of what might happen in terms of better markets going forward.
Dan, I appreciate you taking the time to join us once again and give us our grain market outlook.
Thank you very much, Shelby. Take care.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but stick around because we have more for you ahead.